Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Jeffrey Currie joins us, professor of price theory at the University of Chicago, a small firm downtown. Great interview yesterday. Jon Ferro with Mr. Solomon.
Saw that, yeah.
It was like, it was like piercing. It was like
they were in Versailles.
Wherever, Currie lit Versailles with his energy knowledge. Yep. Jeff Currie joins us now. Energy Pathways at the Carlyle Group. He roots for the Baltimore Orioles. Jeff, copper. I got to rip up the script here. We're not doing oil. We're doing copper. 2011, 2021, 22, and now another surge way out over 3 standard deviations. What's different this time with a surging copper?
One, the investors have finally bought into the view that China is not the only game in town for copper. That's the main thing, is people finally wrap their heads around, yes, the property market in China can sink and you can still be long copper. And positioning is full force right now. And I think that if you look at what's different now, it's the willingness of the investor to embrace this market despite the fact that there's a weak property market. And that's what happened in 2021 and those other time periods that you were talking about, is people started buying into it. Then all of a sudden the property market weakened. They got too scared and pulled out of the position. I think there's a couple things that make this different. Is one, they've now seen that copper demand can rise in the face of a declining property market. It's up 6% right now in a very weak property market. But also, they've seen that the government's willing to spend infrastructure on green CapEx. So there's a lot different. Is there
a utility overlay as we see utilities surge because of electricity build out? Does copper go up with the AI enthusiasm?
Oh boy,
100%. I'd like to say, AIs, chips and copper. You need the chips, but then you need the electrical wiring to be able to power those chips. And one of those chips, the NVIDIA chips, the GPUs, consume as much power as the average American household. So you're going to need a lot of grid connection to be able to accommodate that type of growth. And, what is the bottleneck for that? It's copper. So all roads lead to copper, whether if it's military spend, AI data centers, green CapEx, they all point to copper.
You couldn't have copper in a million years. I wouldn't have guessed it. So what do I know? But so there's the demand side of the equation, Jeff. You just highlighted a number of sources of demand. Can you explain to us kind of the supply side of copper? I don't know anything about this. Where does copper come from, and how's the supply?
It's one of the last of the good old-fashioned commodities you got to dig out of the ground. Think about oil with shale manufacturing, aluminum manufacturing. You got to go out to very remotely located, geographically restricted places like Chile, Peru, the DRC, Mongolia. It's only located in a few places around the world, though in Zambia in that. And a lot of those places are incredibly difficult to get into. Then you got to dig deep. Your ore grades have come down. It can be anywhere from 12. You take, Ivanhoe's big mine in the DRC. It took 26 years to bring online. There is a big commitment to be able to get the supply online, and you have strong demand. And everybody's been sleepwalking into this, even though they've been told about it. We started calling copper the new oil back in 2021, and it rang on deaf ears. Now it's finally people are perking up to the story, but it's going to take years to bring this.
I've been medicated, Paul. Ask one more question, and then I got to do microeconomics with Professor Currie.
All right. So while we have you, Jeff, here, talk to us about oil here. I'm looking at. I like to quote WTI crude oil. I'm an American. I love the guys down in Texas and Oklahoma and all those crazy people. $79 a barrel here. What's driving oil these days? Is it supply? Is it demand? What are you focusing on?
All the commodities are being driven by the same demand forces. It's late cycle, business cycle, in the sense that you can think of 2022 and 2023 as being your classic mid-cycle pause, where you raise rates, higher energy prices, the system slowed down. It regathered steam, consolidated around the higher rates, and now we're chugging back off into the second half of the business cycle. That's when you want to own oil and commodities. And it's about the level of demand stressing the inability to supply. That's why all of these markets are going up. The vast majority of them are in backwardation. It's all your typical, end of cycle type of bullish structure that's playing out here. And I don't see this oil being any different than copper or some of the base metals.
And now, folks, Drive Time America, early in the morning, your microeconomics segment. Jeff Currie, we just were honored to have Richard Portis, a giant of English economics in London Business School. He was kind enough to give us a story about studying under John Hicks a few years ago. I want to talk about going back to copper and to China and all the emotion. Jeff Currie, is this a shift in demand along the curve or an outright shift of the curve that has a permanence?
The outright shift in the curve is permanence. And think about how much of that's occurred since 2021. The military spend, whether if it is munitions in the U.S. to the tune of $95 billion, $100 billion in places like Germany, and then you throw in the AI data centers on top of that. That's all an outward shift in the demand curve. So, that's going to lead to structurally higher prices. And I think the question is, why will it lead to structurally higher prices? Because somebody's going to have to be crowded out here. There's not enough supply to go around to everyone. And so we're going to find out where demand destruction actually occurs.
Jeff Currie, thank you so much. That segment of Microeconomics with Bloomberg Surveillance brought to you by the George Stigler Foundation, Chicago. Jeff Currie, thank you so much with Carlyle there. We squeeze a 3-hour conversation into 8 minutes with Adam Posen, the Peterson Institute. Adam, thank you. Wonderful to catch up with you. And I've got to go to an essay off of one of my heroes, Maurice Obstfeld, writing about Trump's plan for the Fed would revive 1970s style inflation. Are we close to returning to the ugly inflation of our youth?
We may be only a year away from our ute, Tom. Joking aside, I think Maury has it right that if they talk about driving down the dollar for reasons of a trade deficit, which doesn't matter, or putting on import surcharges, all this Nixon economic policy channeling from the early 70s and making the U.S. undependable in global markets and in global institutions, that's inflationary. Maury is right, and we're going to be following that up, Peterson, with other studies.
I want to get this in because Paul's got a bunch of questions. I can't say enough about what Fred Bergston invented and what Adam Posen has driven forward. Obviously, Olivier Blanchard there with all of his good work. But there's a guy that wrote a paper that was hugely influential for me decades ago. His name is William Klein, and his basic message, folks, was stop worrying about China-U.S., Japan-U.S., Australia-U.S., in that it's a diffuse system of currency movements. Off of William Klein, Adam Posen, as we angst about Japan and their depreciation or devaluation, how does it diffuse in a William Klein way across the Pacific Rim?
Well, I think what Bill Klein was saying years ago is even more true now. The dollar is dominant in reserves. The dollar is dominant for so many things. But in terms of the effect of any bilateral exchange rate on real outcomes, it's very small for anyone who's not the U.S. I mean, putting it this way, I phrased that badly, but if Japan depreciates by a huge amount, which there's no particular reason it should, then it actually doesn't matter that much to the U.S. What starts causing concern is in a situation like now, where the Fed is tipped to keep hiking potentially, where U.S. growth is tipped to outperform potentially, and Europe, Japan, China, others are all go lower. Then you've got an overall appreciation of the dollar, and that's a different story.
I bring this up, Paul. It's so crucial because the media is so fixated on U.S. this, U.S. that, and it's a much more complex economics than what's portrayed in the modern media. Paul?
Adam, we had this PPI data today. Adam, came in, hotter than expected, which is kind of goes to that narrative that inflation is not whipped. Inflation is still out there. How do you think about inflation in this U.S. economy these days?
Well, Paul, I've been, and you've had me on before, I've been in the camp suggesting that the inflation was going to be moving sideways on a multi-month average this year, once you got down into the low threes, and that's what's happening. 1 month's PPI, one way or the other, doesn't really tell you anything. More importantly, the Fed needs to talk about what its forecast is and what its goals are. But for people trying to assess inflation, yeah, we're stuck at around 3% inflation. I would expect headline CPI to go down a bit more in the next few months and then come back up a bit.
So given that backdrop, Adam, what do you think our Federal Reserve should do over the coming months here as we head into an election?
I think they should hold off on any rate cuts until at least November, barring something strange happening like a financial problem or a cratering of the real economy, which I find extremely unlikely. I think they should be prepared and laying the groundwork for raising rates in 2025. And I think they should be looking at and arguably talking about the fact that either they're going to change the inflation target and move it up, or if they don't want to do that, they need to explain why they're comfortable with inflation staying around where it is for a while. They can't just keep hoping that someday they'll get to change the target, but they don't have to talk about it now.
So, all right, Adam, so one of the key drivers, obviously, for the Federal Reserve is just the U.S. consumer here. We had some Home Depot results today that were a little bit weaker than expected. Of course, we'll hear from Walmart tomorrow, Thursday, after the Thursday with their earnings. How do you view the U.S. consumer here?
I mean, the U.S. consumer is continuing to be quite strong. The idea that it's tapering off some versus a year ago is not a surprise, given that real income growth hasn't been that high and that people are saving less now. So we're coming to a point at which U.S. households are probably on average not going to keep decreasing their savings rate. And so, fine. But the Fed isn't supposed to be trying to fine-tune the economy, to use an old phrase Tom will recognize. And so a little bit of slowdown in consumption is okay.
I look at them Posen at the real yield here, and I think we need to frame it within nominal GDP. The great miscall of the last 24 months, maybe post-stimulus, and Blanchard wrote about this brilliantly, calling the third stimulus the Biden stimulus. We've all misjudged real GDP, and certainly we've all misjudged nominal GDP with the sustained inflation that we've had. Do you have in your head where the real yield needs to migrate to assist business, to assist a beleaguered housing market? Where does the real yield need to head?
I think the real yield needs to head where it has to head, irrespective of business in the housing market, Tom, and that is flat to up. I think R-star, the neutral interest rate, is going up because we've got productivity rising, we've got risk aversion down, we've got division in the world with China, so less capital inflowing here. We've got growth prospects up, we've got fiscal discipline down.
Okay. I got to rip up the script here because we just got time. This is so important because we just had Vice Chairman Clarida in here as well, and he agrees with Adam Posen that there's a new R-start. How do you presume the messaging of the Fed teaches us that 2% is history?
So the way they're doing it for now is Powell and a couple others are starting to sort of float the idea that maybe R-star is up, and for good and bad reasons, mostly good, they claim. And they start redoing the dots every couple months, every few months, and moving up bit by bit that 10-year projection, 10-year rate projection. But I think it would be helpful for them to talk more bluntly about why R-star might be up, and if R-star is up, how far that would be. And then additionally, they then have to confront the fact that if R-star is up, then their policy isn't as tight as they think it is.
Have we ever done this before? Have we ever jawbone 2.0 gospel?
With sleight of hand in the late 90s, didn't really admit it.
Right.
So no, there hasn't been a public situation because once Bernanke comes in and starts talking transparency,
exactly.
Our stars on the way.
But Adam, is it Old Testament or New Testament? I mean, it's a gospel here, and I don't know. We've never done this before, have we, Dr. Posen?
Probably not, Dr. Keene, but the fact remains that it has to be done. If the Fed just keeps telling people that policy is close to right or tight when financial conditions are loose and our star is rising, we're going to end up with a mistake or a huge surprise, one or the other.
Adam, thank you. Adam Posen of Peterson Institute. I can't say enough about the importance of their website. Long ago and far away, he was at a bank in Little Rock, and he was day trading the meme stocks. We don't have time for this. Joining us in studio, Congressman Hill of Arkansas, who is one of the sane voices, whatever your politics, in Washington. The arch matter here is Gensler do something. Is it healthy in America to have day trading of these stocks like reminiscence of a stock operator in 1923?
You know, Tom, it's good to be with you and Paul. When we had this first come up and we had Roaring Kitty at his height, I asked the question, is the bulletin board, when you subscribe to a bulletin board on Reddit and people put information out there, is that stock research? Is that a recommendation? Is that evidence of front running? And I never got an answer from the SEC on that.
Okay, I've got to turn. We got a long agenda to talk. This is a 2-hour interview. Margaret Brennan would make it 3 hours. French Hill, in Arkansas, there is the idea of tariffs of China saying we don't want your chicken, or China doesn't want Brazilian chicken. They have tariffs that discourage the import of Tyson's Food chicken, Arkansas chicken, into China. So we're going to turn around and do 100% tariff on an EV that we won't let into the country as well? You're not in a swing state. Explain this.
Boy, that's such a good question. This is so concerning to me that when we get into this across-the-board tariff approach by either the Biden or Trump administration, we recognize that we have an economy that we're deeply integrated with. China and the United States have deeply integrated economies, so to use tariff policy really backfires ultimately on both countries. I think you're much better identifying the technologies you have concerns about in foreign direct investment in China and then handle it that way.
Paul, I remember years ago at lunch where a senior officer of Tyson's Food explained to me that they figured out where they could send the dark meat, and they would send the dark meat to China. It's old news, but the answer is the congressman says, we have relationships across many commodities.
Beaks and claws.
Yeah, is that right? Okay.
Beaks and claws go to China.
Is that right?
Yes.
Wow. How big is Tyson Foods in Arkansas?
Well, it's one of our biggest corporate partners
Walmart,
because Walmart, Tyson Food, J.B. Hunt are our three big Northwest Arkansas anchor enterprises, and they're global reach.
Yeah, it's just extraordinary. So it is an election year. What does that mean for the day-to-day workings of Congress? Do you guys have I assume you have a to-do list. How does that impact it by the fact that it's an election year and there's a lot of noise in Washington?
Well, a couple of weeks ago, Mike Johnson got to celebrate his first day as Speaker because after passing the Ukraine, Israel, and Taiwan package, the Foreign Intelligence Surveillance Act reform and reauthorization, and 24 spending, those were all things we were supposed to do in 2023.
Right.
So having cleared the decks of those, Paul, I think you'll see us move into campaign mode, which is really messaging bills to show the sharp contrast between the Biden administration and how Republicans would govern. But there are things we have to do. A farm bill. Every 5 years, we authorize the agriculture programs. That's up. I expect to see that be marked up in the House Ag Committee this month. National Defense Authorization Committee. And then, of course, the most important is debating fiscal 25 spending. So those are all on the plate, even during an election year.
And, of course, we have geopolitical issues all over the world that has everyone's attention. What's your current thinking, or what's the current thinking within your house as to what's going on in the Middle East and our policy towards Israel, our policy towards that whole situation?
Well, our policy towards the Middle East, I think, has been off track as the Biden administration has really taken a page out of the Obama administration, which was to coddle Iran. And when you look at this, Iran is a partner in everything bad going on in the world today, including the invasion of Hamas from Gaza into Israel. And they're at the heart of it. And we freed up money. We freed them up from sanctions all under the Biden administration. House Republicans and a large portion of House Democrats opposed that policy. And I think it's at the heart of rearming Russia in Ukraine, partnering with China, because China buys 80 or 90% of energy from Iran, and therefore sending them money. And then they're arming the Houthis that have disrupted Red Sea trade. So at the heart of this axis, new axis of evil, I think you find Iran at every step.
Is there a politeness in Congress right now? Have things improved from the madness of 12 months ago?
Well, we have people who are performance artists in Congress, and then we have people who are there to help govern and drive the agenda and counter the Biden agenda if you're a Republican.
But the performance artist just had a boo fest. It sounded like the British, sounded like Parliament for a way. So is there a sea change here where maybe we're getting back to a politeness?
Look, I think Republicans in Congress want Mike Johnson to continue in the speakership. He's doing a good job. And let's get through the, as you say, Paul, the national election in November. Let's focus on that. Let's have a contrast between what Republicans would do if we expanded our majority in the House, took the Senate, with or without a Biden presidency. I think that's what we should be focused on.
Okay, now we got a problem here. First of all, we got Purdue October 28th. And, you know, we got the Red White Showcase October 4th. But this year, Arkansas basketball has a different character to it as well. They're popping $7 million to the guy from Kentucky. I mean, Arkansas's playing large here. What's the impact of John Calipari coming down and changing Arkansas athletics?
Well, we're fired up to have him, and we're glad he's going to keep his shirt on. Our previous coach would always rip his shirt off when we had a victory. Didn't have enough victories, but we're glad to have him. Looking forward to him rebuilding our program. But, you know, my concern about NCAA sports is where is it going with name, image, and likeness and paying players, and that they can enter the portal at any time. How do you have a relationship if you don't have a contract with people? Do
you have any understanding that the money that Calipari brings in pays for history professors or banking professors?
Well, I think we know NCAA sports that football does cover a lot of operating expenses at big universities. There's no doubt, and sports plays an important role there. But I think we're on the cusp of a really turning point in college sports when we tried to figure out, we have these huge contracts with coaches, right?
Yep.
But how do we get them the players they need to play to deliver on that contract?
Paul, Arkansas Duke, November 29th.
Ooh,
I mean, there's a road trip.
Yeah. I will
go down. Congressman Hill could join us there for our play-by-play.
Yep. Yeah, that'll be a game.
The play-by-play will be the ticket to admission.
Exactly. Congressman, talk to us about the economy in Arkansas. How are the people in Arkansas doing?
You know, the number one thing I hear when I'm at home every week is inflation and the impact on inflation on small business and families. The second thing, which you've picked up on a national basis on your show, is people are still looking for the talent they need in their workplace.
Yeah.
So this is one of those economies like we don't see very often. Right. And so inflation's number one, though. No, there's no doubt about that.
1 minute, you have new legislation that you're initiating. Do you have a Democrat who's lined up with that? Tell us quickly about that new legislation.
So Fit 21, this is creating a regulatory framework for digital assets. This would tell the CFTC and the SEC how to manage, regulate, and exchange digital assets out there in the marketplace. We want America to be top in innovation there. And right here in New York, Richie Torres is a great leader on designing that legislation. Jim Himes in Connecticut has been very helpful. So those are both Democrats that have worked hard on it.
Do you support ETFs for Bitcoin?
You know, I do because I think the SEC did the story, and I think the cash market in alignment with the Bitcoin market's been demonstrated. Okay. So we'll see what happens there.
Congressman Hill, thank you so much. He's a Republican from Arkansas there.
Ninth generation Arkansas.
Come visit.
That is amazing. I can't go back.
Davy Crockett used to come over for dinner.
I think I'm back in Ireland to get the ninth.
Great to be with you, Tom.
French Hill, thank you so much. Always looking for the next challenge. Here with the Dow up 36. Julian Emanuel joins from Evercore ISI this morning. Readjust the bull call right now. 2 Octobers ago, bull market, the Yardeni move, the Ankampura move. October 5, 6, 7, 8 months ago, another bull market. Are we still in a bull market?
We are still in a bull market. So if you go back to October of 22, the entire downdraft in 2022 and really the other side in 2023, it was very valuation driven. Okay, we understand that the earnings have migrated towards, for the most part, that select 7. But at the index level, the earnings have stayed roughly the same. The thing about 2024, which convinces us that even though we think you have a correction in front of you, is that the bull market has further legs, is you're actually going to see earnings growth for the first time in 2 years.
So what did you see in this earnings cycle that we're just kind of finishing up now? We'll get some retailers this week. It seemed pretty good to me. There's good earnings growth out there.
It was a bit odd. So basically what happened was that the surprises were much larger than expected because revisions went down prior to the start of the quarter. There isn't really an explanation other than perhaps the message of what was a subpar GDP first quarter. But you're basically on track. 5.5%, maybe 6% earnings growth. And from our view, that's good. We expect roughly that rate of growth throughout the year. But the problem for the markets is the market expects that number to be upwards of 10%.
Has the wall of money moved in to support stocks? Or with a 5% money market fund, is it yet to happen?
So for us, it has yet to happen. However, the key factor here is you've had a revision of behavior. Okay, if you can just sit there and get upwards of 5% risk-free, that's not bad. And particularly as the debate goes on and the Fed seems more and more hamstrung.
Can we rip up the script?
Please.
Rich, thanks so much for this. Plug Power, that's a Dow Jones stock, up 70%. GameStop up 113%. AMC Entertainment up 129%. This is not anathema, but the opposite of the Ed Hyman culture. Are you telling me all this meme stuff is healthy for our confidence in our financial system?
No, it's not healthy. And frankly, what it is something the Fed looks at this and this disturbs them. Because what it's saying is that on balance, financial conditions are probably still too loose to get inflation back to target.
Ed Hyman goes back so far. He remembers when there were fruit on the buttonwood tree. I mean, he goes back that far. Who's a police officer here, Julian Emanuel?
As it probably is for the most part, your broker, and frankly,
there's no brokers. Oh, stop! There's no brokers anymore. Good morning, Commonwealth. We thank Commonwealth for their support of the show. Come on, Lisa Mateo's kids are day trading. GameStop up what 100? Come on, Paul, help me here.
It's tough out there for if you're not nimble out there on some of these names. All right, let's just broaden it out a little bit there, Julian. Small cap standouts. What's a small cap standout and why do you like them?
So what's very interesting, and we were kidding about this before the camera turned red, is the concept of quant analysis.
Yep.
And what we found very much is that you have a shift around the concept of momentum, okay? 2 things are going on. Number one, we all know because of the Mag 7 that basically small caps have been, for the most part of the last 2 years, a funding short for active managers. And the is it different this time given the fact that the entirety of the Russell 2000 market cap is below the highest market cap in the S&P 500. And what we would say is it really isn't different this time. And frankly, what you have is a case where momentum is starting to shine. So the Russell 2000 as an index peaked, believe it or not, in 2021. But there's a lot of stocks that have made new highs since then whose earnings are moving in the right way. Those are the names we want to own, putting a toehold into our view that long-term small cap is likely to have a sustained multi-year period of outperformance ahead of it.
What's a momentum miser? page 40 of your deck.
There we go. So essentially the opposite of what I just described.
I see you laughing at me. Sweeney actually reads the decks. I don't.
There we go. There we go. Well, 80 pages, the clients tire by like page 60 or so.
What's that Hyman trick? Yeah. What's a momentumizer?
They are stocks that have not made new highs since this latest bull market cycle and have downward earnings revisions. And it's all a matter of expectations. And if expectations are coming down, those are the kind of stocks you want to under-own, sell, short, that type of thing.
What does Ed Hyman say about materials? Copper. I mean, Ed Hyman remembers when Anaconda Copper was the NVIDIA of the day. Are we back to materials?
I think that's a more mixed view, right? So
Fair,
the question is this a result of a supply drag over the course of years? There's certainly an element to that. Is it a result of the fact that the rest of the world seems to be stabilizing economically, perhaps more than we thought? There's an element to that. We don't see this sort of whoosh-type reacceleration that justifies this increase in prices. But then there's also the idea that assets are moving to hedge an inflation that appears to be more persistent than perhaps we thought 6 months ago.
So what do we do here? And how do we think about valuation here? Because we've had such a move off those October levels, 25% in the S&P and more in some other indexes. Earnings are good, but I'm not sure they're that good. Are we pushing the envelope on valuation here?
We are pushing the envelope on valuation, which is why for us, we think the indexes move a little lower in the near term.
Julian, thank you. Let's do it again. This is too short a visit. Julian Emanuel with us, Evercore ISI.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.